Well, good morning, everyone, from sunny Melbourne, and welcome to our annual end of financial year economic update. My name is Philip Ivanov. I'm the CEO of Asia Society Australia. We're Australia's leading business and policy think tank focusing on Asia. So thanks to almost 300 of you joining us today, and especially, of course, to our corporate and individual members. I hope you're all staying safe and healthy in the current difficult COVID situation in Australia, and my thoughts go out to all of you in lockdown. Today's event is brought to you in partnership with our long-standing partner and member, National Australia Bank, represented today by David Goll, Group Executive of NAB. Thank you for joining us today and for NAB's valuable help in putting this event together. We were hoping that this event would take place in NAB's shiny new offices in Sydney, but lockdown interrupted our plans, but we're looking forward to doing another event very soon in person with you and with National Australia Bank. Before we begin, Asia Society acknowledges that many participants in today's event are dialing in from locations that have traditional owners and custodians. Today I'm speaking to you from the land of Boon Wurrung and Wurundjeri peoples of the East Kulin Nation. I acknowledge the traditional owners of this land and pay my respect to elders past, present, and emerging. I would also like to welcome and acknowledge any Aboriginal, Torres Strait Islander, or First Nations people joining our webcast today. Today's event is our annual program taking the pulse of Asian and global economies and Australia's connectivity with the region. It brings together an all-star panel of chief economists that my co-host will introduce a little later. Well, we all thought that 2021 would be a better year than 2020, and in many ways it has been. Vaccination programs are underway in most countries. Our economies are recovering. We are not in Australia, of course, are gradually opening our borders, but the pandemic has not gone away. And we also face an explosive cocktail of challenges. Geopolitical and economic fault lines between the US and China and Australia and China are deepening. Climate change impacts are accelerating. Just look at Canada this week. Democratic governance model is questioned by our citizens, and trade protectionism and economic nationalism are on the rise. And digital revolution is gathering pace, but we can also see its ugly sides in the spread of disinformation, cybercrime and warfare, and erosion in privacy and accountability. And looking across our region, there's a stark contrast in how different economies have managed their implications of COVID-19. This makes it difficult for individual countries to recover from the pandemic, but also has deep implications for Australia's economic relationship with Asia. Today we'll discuss the state of the regional and global economy, how the markets are performing in 2021, and review the pandemic's economic impact on the Asia-Pacific region. We also try to look at who was hit the hardest in Asia and the impact on Australian economy. Before we go into our panel and introductions, however, a bit of housekeeping. We'll have a 30-minute panel discussion. We'll then move to Q&A. Please submit your questions through the Q&A box at any time, and we will do our best to answer them all. It's now my pleasure to introduce my co-host, David Goll. David has more than 25 years experience in corporate and retail banking, working capital services, risk and payments. Since joining NAB in 2008, David has held group executive and senior roles across the bank. He was appointed Chief Customer Officer, Corporate and Institutional Banking in 2018. And he has been a member of NAB's executive leadership team. Previous to this, David spent 4 years as Chief Risk Officer, where he had overall responsibility for the risk function. It's a pleasure to have you here today and to open this session, David, and over to you.
Thanks very much, and a warm welcome to everyone. We're absolutely delighted to be co-hosting this with the Asia Society today, and very proud of our history with the Asia Society as well. My understanding is we were in fact a founding member back in 1997. So great to be able to do this today with you. Look, welcome everyone. Clearly we were really very much looking forward to welcoming many of you into our new offices in 2 Carrington Street in Sydney. Hopefully we'll get an opportunity in the not too distant future to be able to do that, and obviously today's events online. Before I introduce the esteemed panel today, I just wanted to highlight a little bit of what we're seeing in the market from a bank perspective and some of our work this year. As many of you probably know, NAB's been in Asia for more than half a century. In fact, this year marks the 50th anniversary for our Singapore office, so we'll have some celebrations hopefully up there during the course of this year. But like any year, our team has worked both closely with Australian and local clients in the region, facilitating really important trade and investment flows between Asia and Australia, and that's the mainstream of our activities. But unlike any other year, clearly the pandemic has meant that our clients have needed support in a variety of ways, and often more than ever. We've spent more time really understanding the needs of our clients in the region, and hopefully coming up with some solutions that help manage some of the unprecedented risks and indeed some of the opportunities that have gone with that as well. There's no doubt that many parts of Asia are still in a terrible health crisis. But interestingly, and notwithstanding that, what we've seen from an economic viewpoint is that the pandemic has not dented interest amongst investors in Asia for Australian investments and real assets. And in particular, investors we've seen want to know more about ESG risks and focusing more and more on environmental and social considerations. Hopefully in the panel discussion today, some of the panel members might touch on that and the interest in ESG from what they've their perspective and what they've seen. On this theme, certainly one highlight for NAB late last year was issuing the first environmental rehabilitation bond out of Asia for Australia. And that was a great achievement for the team. And the deal really highlights the important role I think financial innovation plays in helping our clients understand how they can go about transitioning to a low carbon future. So on that note of success, let me introduce today's speakers. We've got Ivan Colhoun, who's the Global Head of Research in the Markets Division of National Australia Bank. Now, Ivan's responsible for Australian economics, FX research, rates strategy and commodities research. And having spent 15 years at Deutsche Bank, then Ivan followed his passion for aviation by joining Qantas as Chief Economist. He's also consulted to SEEK, Virgin Australia and IATA. Welcome, Ivan. Next, we've got Cherelle Murphy. Cherelle's the Chief Economist at Austrade, and Cherelle leads a team of economists, data analysts and engineers that guide government policy and trade, foreign investment and tourism. Now, prior to Austrade, Cherelle was a member of ANZ's research team. She's also worked as a journalist for the Australian Financial Review for 5 years, including as economics correspondent for the paper in the Federal Parliamentary Press Gallery. Welcome. Sitao Xu is the Chief Economist and Partner at Deloitte China. Formerly, he was at the Economist Group, the Economist Corporate Network, and EIU. He's also learnt his talents at ICBC, where he was Head of Economics, and Societe Generale, where he was Chief Economist for Asia. Welcome, Sitao. Now, today's discussion will be moderated by Haidi Stroud-Watts. Haidi doesn't probably need much introduction for many of you, but is the Sydney anchor for Daybreak Australia, Bloomberg Television's flagship morning program, which kicks off the Asia Pacific Trading Day. She also co-anchors Bloomberg Markets Asia with Rashad Salamat in Hong Kong. Welcome, Haidi, and I'll pass to you in just a moment. So welcome, everyone. Thanks for participating in our panel. It's great to have you all with us, and I'm really looking forward, as I know all of our audience today is on today's session. If you want to see a full view of the expertise and backgrounds of our speakers, we do have a link that we're sharing with you on full bios there. And finally, despite today's session being virtual, we do encourage you to get involved with the conversation. And as Philip already mentioned, please ask any questions you may have in the Q&A box. I'll now pass over to Haidi. Welcome and hello.
David, thank you so much for those introductions and your kind words. And we will really be encouraging everyone to ask those questions better. Our audience, of course, have some of their pressing questions answered than just the ones that I'm going to pose to our panel today. If you send those through, we'll try and get through as many of them as possible in the next sort of half an hour or so. Let me get right started because, of course, we are looking at the first half scorecard for Asian markets and global markets, I should say. And during that time, there's been a lot of surprises in terms of how the pandemic has played out, how financial assets and investors have reacted, and of course, a big question mark over how central banks will be dealing with all of these changes and disruptions. I want to pose probably my first question to Ivan. Taking a look at the performance of the first half, Asia has actually perhaps surprisingly underperformed somewhat compared to global peers. Is there more room for that catch-up performance, or are there bigger risks on the horizon given these concerns about the Delta variant and the very patchy rate of vaccination across this part of the world?
Yeah, I think when I was looking at these questions before we started, I went right back to pre-COVID actually, and I think it gives you this good picture of what happened. So what we saw initially was a big drop in equity markets everywhere around the world, and I would say that this is a global shock. Every economy is having very similar performances, few slight differences, but big drops in equities, big drops in Asian currencies, and then they recovered, actually bounced back very strongly. And that's what we saw throughout last year. And then this year, I think, as your question suggested, there's just been a little bit more idiosyncrasy to a lot of the different markets. And I think the big things in Asia, some economies have done very well, those that are exposed to IT, particularly, and chips. Others haven't done so well, and definitely that vaccine rollout is becoming a differentiator for different economies. So we know that it's going very, very well in the developed markets, or some developed markets, US, UK in particular, not going so well in Australia so far, but improving. And then some of those emerging Asian markets, as you said, the Delta variant has been quite important. It hasn't really set any market back massively, but it has led to, I think, a bit of relative underperformance compared to countries where the vaccine is being rolled out more quickly.
Sitao, the challenges for the Chinese market are a bit more idiosyncratic. I think there are, regulatory overhang. There are concerns over the US-China relationship always. But do you think the recovery there can continue to drive that growth and recovery momentum in the rest of the world?
Okay, there's clearly a disconnect between the Chinese economy, which is performing extremely strongly, and the financial market. Why? Well, inflation has been a big debate in past few months. My view is inflation perhaps is more transitory in nature in developed countries, but for the largest manufacturing economy of China is indeed a challenge. This challenge is particularly acute for many sectors who are in the middle because they cannot fully pass on roaring commodity prices to final users. So the underperformance of equity market, I would attribute that to a mild profit squeeze of corporate sector. But equity market is only part of the picture. Fixed income market is developing quite rapidly in China in recent year. And of course, the strong RMB is a part of that driver. So again, I wouldn't attribute that to vaccine rollout or containment of COVID-19, because in China, COVID-19 for practical purpose really has been eliminated.
Sitao, I'm glad you bring up the of course, topic of commodity prices and just the incredible story that we've seen over the past 6 months. Cherelle, we know what the headlines are when it comes to China-Australia trade, right, on a day-to-day basis. I'm wondering what you see, though, in terms of trade flows, the amount of business that's actually being done on a country-to-country level, and how much that, purported new super cycle in commodities has been a part of that.
Well, for Australia, it's been an enormous part of it. We've obviously seen some disrupted trade due to the disputes, adding not only to the pandemic and border closures, but obviously the disputes have been problematic for many Australian producers. However, the commodities side is actually doing, for the most part, relatively well. And by that, I guess, I mean, iron ore more than anything, but LNG equally very, very strong. Those commodities, prices for those commodities have risen somewhere in the vicinity of 130, 140% since the beginning of last year. And obviously that has contributed massively to Australia's trade balance, which is looking really pretty good. In fact, the run of trade surpluses that we have here in Australia is the best that we've seen since the mid-1970s. So things are going well. Equally on the agricultural side, we're doing quite well across most commodities. Some standouts like barley, particularly good. We've had a really good season. However, that's not the case for all, and coal would be the obvious case in point, which trade disputes with China have resulted in effectively zero trade now to that economy. And we have managed to find markets elsewhere, though, so it's certainly not completely a negative story, but it has required a lot of diversification. So some quite a different trade picture from what there was 18 months ago, although in macroeconomic terms, it's still looking pretty good.
Cherelle, what about the movement of people and the labour market? Because obviously the big beneficiary of the pandemic story has been robust trade globally, right? Have you seen, or do you anticipate seeing more of an impact with border closures and just a stop when it comes to the usual flow of people that we would normally see?
Yes, I mean, the border closures for Australia have been incredibly difficult for those, particularly in the tourism and the international education areas. So our service exports down around about 40%. So, the goods exports are very strong, service exports, quite a different story. Of course, as long as the borders remain closed, that will remain very difficult to overcome. We have some small, programs where we're trying to bring in international students, but it is really just a trickle. This is something that we simply can't overcome in the short term. It's hopefully longer term will normalize, and we certainly, as a provider of really world-class education and world-class tourism, will see those students, those working holiday makers come back. But in the short term, it's a big gap to make up for, and certainly the domestic economy is doing very well, but it is still a gap which will be difficult to overcome.
Ivan, when you take a look across, say, the next 6 months across the region, where do you see the economies that are going to struggle the most, both in terms of the virus containment story, the vaccine supply side of things, as well as how well they'll cope with potential tapering?
Look, I think we have to really look at it more about the world's got a responsibility to try and get the vaccine out as quickly as possible to all economies. And it's going to be, every economy, I think, will be improving. It will just be the rate of improvement that will be slower in some economies than other economies, depending on the vaccine rollout. So I think I'd be optimistic that everywhere is getting better. And we've got thankfully a health solution to a health crisis. So that's a positive thing. And I think the faster we can get it rolled out, then the sooner we can return to whatever the new normal is, but it probably won't be too different from the old normal. In terms of tapering and central banks, I think the big story, how I'm thinking about it, is obviously we had this event. It led to shutdowns, lockdowns, a big drop in demand. Government stepped in, central banks stepped in and provided, support for the economy while we had that severe weakness. Now we're rolling out the health solution. I think when that's rolled out, it will be appropriate for central banks and government authorities to withdraw that support. So we're now moving into that phase. I think you can see the US is beginning to talk, or a number of the Fed governors are beginning to talk about definitely rate rises in 2023. There's a lot of them thinking that. There's some even thinking 2022, and there's central banks in the region. Korea's talking about moving rates up. New Zealand's talking about moving rates up early next year. So the markets are beginning to price in the return of rates going back to more normal levels, and that's a good thing, because that's telling you that we're moving through the crisis. And we don't need that extreme policy support.
Sitao, what do you expect from the PBOC? Because there are sort of some views that this will be a very, targeted, sort of delicate strategy to be taken.
Heidi, I know you watch PBOC very closely on Bloomberg. PBOC has a different strategy and a different objective from almost every central bank in the region. Why? Because RMB is getting stronger and stronger. I think PBOC is becoming quite uneasy about this one-way appreciation. And the recent moves on special instrument of certain monetary lever or reserve requirement rate on foreign currency, suggesting the PBOC wants to guide interest rate even lower. But of course, there is a floor for interest rate because globally and rates are moving up. But at the same time, in the medium term, China does have to face the issue of leverage, corporate leverage. And of course, the rich valuation of certain cities' real estate market. By the way, that's a global phenomenon. It's not China phenomenon. So I would say PBOC is likely to maintain a relatively accommodative monetary stance next couple of years. So rates won't go up.
So I know we were talking prior to the panel beginning, and you said you haven't actually listened in to what President Xi said in his big speech today to commemorate the 100 years of the founding of the Chinese Communist Party. But I suspect you have a pretty good idea of the topics and the themes that were addressed. If you're an investor looking to China, what are the signals that you're looking for?
I think if I were an investor, I would look at China's open door policy. I would look at whether China can continue open up financial system, because in the end, no country has a liberalized financial system in the absence of external pressure, whether that's IMF bailout, but clearly China won't have a crisis. So it's not easy to do that in the absence of external pressure, but really US-China tensions in many ways have served as a catalyst for opening up. So that's something I would watch continue. To give you one example, again, I know this is something you watch very closely on Bloomberg. For a very long time, people are looking at in fixed income market, whether Chinese policymakers will be willing to turn that from one-way movement into two-way movement. I think that's something we should watch very closely.
Cherelle, we've talked a little bit about the tensions between Canberra and Beijing. We now know the two countries have taken to trading these barbs at the WTO. How does it affect overall trade sentiment? How does it affect the way that you do your job?
Look, it's definitely a difficult time. In fact, you know, my colleagues over in China say that they really haven't dealt with such difficult conditions before. So there's no doubt about it. This is not a particularly easy time. There's been both formal, I guess, interruptions to trade from China to Australia and informal ones too, where literally our goods are being stopped at the border, or Chinese consumers encouraged not to buy Australian products. So there's no doubt that things are highly interrupted, and that trade sentiment is really poor right now between the two countries for those, certainly for those producers and exporters that are affected. But what we have also observed is that the Chinese consumer remains very fond of Australian products, and Chinese consumer sentiment towards Australia is still really good. So even on the day that the strategic economic dialogue between Australia and China was announced to be disrupted, we actually saw 50 Australian companies take part in a Chinese trade expo, and we had some really good responses to that, and have actually consequently sold a lot of products through it. So the Chinese consumer is kind of along for the ride. It's not, the gates are not completely closed by any means. And the other thing I'd point out is that there's a strong complementarity between what Australia produces and what China wants. And, there's a mutually beneficial economic relationship there. And that is not something that we see going away either in the short term or the long term. So I guess once we find our new equilibrium, things will settle down and hopefully get better. But you're right, it's difficult in the short term to see exactly how that evolves.
In terms of that, finding that new equilibrium, Ivan, I'm wondering from a market's perspective, there would be sectors that you think are particularly vulnerable to a further deterioration in that relationship, and how that could also be managed with new trading relationships and perhaps trying to make up for that shortfall elsewhere in the region.
Yeah, it's kind of interesting at the moment. So if you look at Australia's exports to China, in May, they were an all-time record high of 16.5 billion. So the highest ever. Now, a lot of that, as Cherelle said, is iron ore, 10.6 billion, also an all-time record. And if you look at all other exports, they've dropped back to 3.6 billion from 6.7. So we've lost about 3 billion of those other exports. Now, some things, if you're talking commodities, it just takes a bit of time to switch the trade somewhere else. So Australia no longer exports any gold to China. Does that matter in the slightest? I would say basically not. There's a global market for gold. There's a global price for gold. China doesn't buy Australian gold. We sell the gold somewhere else. In coal, I think Cherelle mentioned this as well. Our coal exports are basically as high as they were before China stopped buying coal, Australian coal. The same volumes being exported, we're now sending it to India, to Korea, to Japan, to other countries. So there's been this rebalancing, and I think that happens in commodities. Now, the price may have to adjust for a while, but now if you look at met coal, our prices are higher than 18 months ago when China started having this dispute. So Australia is not being disaffected. And in fact, the prices China's paying for met coal are much, much higher. They're paying an extra $120 a tonne to buy met coal from other suppliers. So I think in the commodity space, where it's a pure commodity, barley's one. We're sending a lot more barley to, I think it's Saudi Arabia. So the markets move around. I think for manufactured goods like wine, it's a bit harder to develop those new markets. And we're very interested in Australia, what happens to tourism and what happens to education when the borders reopen. Now, obviously with the borders largely closed at the moment, the answer is zero. So, but does it go back to being like it was? They were very, very big markets, or is there some diversification away? And then what do we do as a country? I think we diversify. So we know there's a lot of interest in education in Australia from throughout the Asian region. So, we've got Indian students, we can look at diversifying there. So I think it's a really interesting one. It hasn't been as negative as you'd expect. The Aussie dollar hasn't collapsed. The economy hasn't collapsed. Unemployment hasn't soared because of what's going on between China and Australia at this point in time.
In terms of the longer term risk, and Ivan, I want to put this to you because David had mentioned it in his preamble about how ESG is becoming increasingly a key issue for portfolios. And we know recently the likes of Robeco putting out that warning to Australia saying that this could become a real risk for investing in the country for companies that are being held in any given portfolio. Is that something that is given enough attention to in the conversations that you're having?
Yeah, look, I would say it's grown a lot. So if you're talking about equities, like if you're a company or if you're CEO of a company, then you get asked those questions and have been getting those questions for quite a number of years in terms of what are your emissions, what are your targets going forward. I think it's very clear when you look around, Europe is very, very much more advanced down the ESG path than other parts of the world. But what we're seeing now, I think increasingly, is Australian companies setting their own net zero emissions targets by certain times. So whether there is a strong government policy or timeframe commitment to get the whole of Australia to net zero, companies are making those changes. So I think it's happening a bit by default, and certainly investors are requiring that Australian companies make those changes. And so I think it is happening, and it will continue to develop in that way. So it's probably new in a lot of the talks in Australia, but it's only going to get louder and louder and occupy more time, I think.
Cherelle, on a country-to-country level, though, there's already some sense that, for example, the European Union have suggested that they won't do a trade deal with Australia until Canberra beefs up its climate commitments. Is that going to be a real thorn, a real bugbear going forward?
I think it is certainly a bugbear in the sense that essentially it's trade protectionism, and that's what we don't want to see, because that obviously has negative economic connotations. So certainly the way that the Australian government is looking at this is that there are more positive ways to ensure that we are getting on top of emissions, including investing in new technologies. And we have a technology investment roadmap which sort of seeks to put government money into leveraged private sector money and sort of create a multiplier effect out of that. So, we're sort of seeing that as these potential kind of barriers as clearly very negative for not only the Australian but globally economies, and think that there's better ways to go about addressing the problem.
I just wanted to also remind all of the attendees and people listening, if you have any questions for any of our guests and panelists today, just pop it in the chat section and we'll try and get to it before that finishes. Sitao, obviously Beijing has made it a key policy priority to really double down on addressing climate change and reaching their emissions target. What are the opportunities in that space, and how do you see that moving forward in the next few years?
ESG is actually quite big these days. I think Chinese policy makers are taking that extremely seriously, partly really due to external pressure. During your discussion with other panelists, clearly Europe is a major source of pressure. When China was signing bilateral investment treaty with Europe, of course, that treaty right now is in limbo. I think ESG was a big part of that. And of course, China is also in its own best interest to pursue this goal. This is actually related to Australia. For example, when you look at commodity prices, iron ore, for example, of course, this makes people in Australia extremely happy. But you may want to ask yourself, in the long run, what's a sustainable price for steel industry? I really think in the long run, China will shrink steel industry significantly. And all developed countries have gone through that. So I think Australia may not want to take this high commodity prices for granted. And of course, high commodity prices also present a short-term challenge for China's committed goal. So in the short term, and are you going to give companies subsidies in the form of lower electricity or energy prices, for example? So in the short term, it's going to be a difficult trade-off. But in the long run, I think this goal is going to be attained.
In terms of Beijing's other policy priorities, we look a lot at their industrial policy, right? Including the huge amounts of investment going into programs, including and not limited to semiconductors. Where are the investable opportunities in that space? And when you talk to people on the ground there, what's their view of regional investment and the opportunities?
Industrial policy has become fashionable in many countries, United States, Europe, for example, in recent years. I can understand that. People talk about import substitution. We all know the track record of import substitution has not been very fantastic. China is not Australia, China is not Brazil, China is not Russia. China would continue to have high reliance of commodities and energy for next many, many years. So China, in my opinion, won't pursue a traditional import substitution because that will result in lower standard of living. But in certain areas, clearly self-reliance will be important. When I talk to people on the ground, as a matter of fact, next week, I will be talking to CEO of Qualcomm and CEO of Honor, spin-off of Huawei. There's still going to be a lot of collaboration between American tech companies and the Chinese companies, because in the end, a decoupling is really in no one's interest. In fact, most people, when they talk about decoupling, I'm not even sure they know what they mean.
Cherelle, the decoupling between China and Australia is one that investors, have become increasingly worried about. We talk a lot about diversification, and I guess at the end of the day, when you take a look at the demographics of China, just the size of China, it's impossible for that growth story to be replaced by another one quite so easily for Australia's benefit, right, in terms of the trade synergies. But what are you seeing in terms of trading patterns, and are you seeing more of an effort to look to alternative markets?
Most definitely. Diversification is definitely happening. Ivan alluded to some of that in his answer before, but you look at barley, for example. We are now exporting zero barley to China, but we are exporting a lot more. In fact, almost record levels through to the Middle East. We're also exporting to Mexico. We've got Australian barley in Heineken lager now. So, we are definitely getting on with that job. You can see it in a lot of commodities. You can even see it in cotton, for example, going to other countries that we've never exported to before. Wheat, coal, it's really almost every commodity that's been affected by trade disputes with China has found markets elsewhere. There are some exceptions to that though, and timber is one of them. Wool is another. Both of those exporting groups are very dependent on China, and it's been difficult for them to find other markets. In some ways, that's because for example, with some of the timber products, the Chinese are really set up to take that, and that's not the case with other countries, with certain industrial grades, etc. So, as I say, for most, it's been you've been able to find other markets. Not so much for some. Wine is another one Ivan pointed out to, that sort of changing the marketing effort that was, very directed at China is not a simple case to translate that into other countries necessarily. Keep in mind also that we've had recently had significant progress towards the Australia-UK free trade agreement. That opens up another market to Australian exporters, which wasn't really a very prolific one actually for Australian agriculture in particular. So there are many sort of small steps where we can get to the eventual result. But again, to take your point, it is easier for some than others.
Yeah, I think what was probably most interesting to me, at least, about the UK-Australia FTA was just the speed at which it was managed to be wrapped up, right? I mean, that's very encouraging, and I wonder if that kind of sets a good precedent for future talks and negotiations, particularly if it comes to wrapping that up within the TPP, which is, of course, or formerly known as the TPP, if you will.
Yes, indeed, and look, there's great symbolism from that. There's no doubt about it. Both countries are very keen to get things happening, and that's certainly where it's going. It's not finalised yet. Of course, has to go to Parliament, but certainly both countries with very positive ambitions towards getting that done, and we've seen things happen.
Before we wrap up the conversation and I hand it back to Philip, I want to ask all of you basically the same question. So the first half, we thought that we couldn't have any more surprises after 2020, but 2021 just keeps kind of lobbing them at us as I sit here in Sydney in another lockdown and talk to colleagues in New York where things are open and back to normal. But I'll start off with you, Ivan. What is the biggest risk to the recovery in the next 6 months for you?
Well, look, in Australia, it's very much a outbreak, as we've seen. Like, if that gets hold, then our governments will shut down. So I think that's why I think the top priority, the number one economic priority, maybe the number 1, 2, 3, and 4, is getting the vaccine rolled out. That is by far the most important thing for every economy and for our economy. A way down the list from that, I think, is there's other health ones if there's a mutation and it's much worse, for example. But so far, the vaccines seem to be doing quite a good job. So I think it's all about vaccine rollout. And then other risks are more, look, if the economy does well, the Reserve Bank keeps interest rates too low for too long, boosts house prices, makes the next downturn deeper. I think that's a possible risk. If they keep rates too low for too long, they might usher in a boom-bust cycle. But I think they're further down the track risks that I'm not worried about just yet. I want to see the vaccine rolled out.
Cherelle, the biggest worry for you?
Look, I can't disagree with Ivan. I think the risk of further shutdown, because we haven't sort of seen the vaccine being able to maintain or to, I guess, allow the progress of economies to open up, is definitely the biggest risk. But look, there's also upside risks to what's going on. We've seen a lot of stimulus, as we've talked about, in the global economy, including, of course, importantly, the Australian economy for us. And there does seem to be a really strong response from the business sector in particular, in terms of business confidence and business investment. So, we might actually see some really good news on the business investment side if we see the corporate sector finally start to believe that there is a really strong outlook out there. So, we could see that come back a little faster. Now, of course, that does come with inflation risks, particularly at a time when we're starting to see labour supply issues. But at the same time, there are some positives going on.
And Sitao?
The risk I see is, if you recall, even more than a year ago, people were talking about travel bubble, whether it's between Sydney and Auckland or between Shanghai and Singapore. Until today, we see no evidence of such travel bubbles. Why? because local politics has played a much important role than we all anticipated. So I think the risk is really local politics, and I hope organizations such as WHO could mitigate such local politics. By the way, in this part of the region, and some cities have begun to take a more focused approach. For example, in Thailand, in Chiang Mai, in Bali, Indonesia. And of course, the approach taken by China is zero tolerance. So I'm wondering whether going forward, we can have a convergence between China and many other countries on vaccine passport. By the way, Heidi, I'm taking my second jab next week.
I envy you. I've yet to get an appointment for my first shot. So we've got a couple of questions actually that have just come through that I think we do still have time for. One is from Michael Shoebridge asking about the sovereign risk faced not just by Australian businesses, but all foreign investors and foreign companies operating in China. Is that risk rising or falling over this year in terms of the predictability of Chinese government regulations as well as law enforcement? Sitao, I think I'll throw that one to you.
Okay, I'm not sure what he meant by sovereign risk. So if you look at a major Chinese company, for example, is state-owned bank or major asset management company, is that sovereign risk? If it's a sovereign risk, actually we call that a moral hazard. I hope Chinese policymakers will continue to differentiate between corporate risk and sovereign risk. Of course, there is still a long way to go. I don't want to bore you with the details. And you can look at Bloomberg, various instruments, the real estate companies, major asset management. It seems to me the market is beginning to make distinction who is too big to fail. But I hope, my view on China is there's no systemic risk, but there will be sporadic financial distress.
Always love the plug for Bloomberg from you, Sitao. I've got time for just one more question from Simone van, and I apologize if I'm butchering your name, Simone van Nieuwenhuizen, asking what the long-term economic effects of the comparatively slow vaccine rollout are in Australia. Is there any modelling on this? Cherelle or Ivan, have either of you seen any modelling done on what that looks like?
I haven't seen any modelling, but I would say the long-term effects I don't think are going to be very big, but I think the short-term effects, we can't reopen our borders until we've got 70 or 80% of the economy vaccinated, or else we have COVID spreading very rapidly around our country, and all the positive avoidances of COVID deaths would happen in Australia. There are also some upsides, I think. What we're seeing at the moment is unemployment has dropped much more quickly than expected in Australia. Underemployment's dropping. Wages, there's some wages pressure there, and I don't know that that's necessarily a bad thing. It might be a bad thing for companies, but workers probably haven't been getting very strong wage rises. So I think it will just mean that we see probably the labour market continue to tighten in Australia, not necessarily a bad thing. What I sometimes worry about is that businesses think that some of the demand they're seeing might be permanent. And I think there's a lot of changes to demand at the moment. So if you're selling caravans or utes, it's very, very strong. If you sell, and if you're running a motel in outback Queensland, you're seeing a lot more people coming through your area because people are holidaying at home. That may not be permanent. So you want to make sure you don't make long-term decisions based on what is quite a long temporary situation.
All right, I think I better hand it back to Philip now. We're running just a little bit over time, but it's so great having all of our panelists today. I hope next time we talk, certainly if this is this time next year, then borders will be reopened and perhaps we can all be in the same room. Philip.
You're on mute, Philip.
Oh, sorry. Thanks so much, Heidi. Expert moderation as always. And thank you, Ivan, Cherelle, and Sitao for this very insightful update. Also, thank you to David for co-hosting today's event and representing National Australia Bank. Also, big thank you to NAB executives Catherine Carver, who sits on our advisory council, and to Tom Mazzaferro for helping to put this program together. Finally, thank you to all our viewers and listeners for joining us today, and hope you enjoyed today's event as much as I did. A couple of updates for those of you that follow our work and are interested in what's going on in Asia. We'll continue to make sense of what's happening in the region in 2021. Next week, we'll host the head of Lowy Institute, Paul Natasha Kassam, for an explainer on tensions in Taiwan and what it means for Australia's position in the region. We also have the honor of hosting Penny Williams, Australia's ambassador to Indonesia, and Ivan Sunito, the CEO of Crown Group, for a discussion on how to enhance our economic relationship with Indonesia. I'd also would like you to save the date, 7th of October, for our signature annual conference, Asia Briefing Live, which we present with Bloomberg. So this is our main program that we host every year to take the pulse of business, economy, and geopolitics in the region. And we're very pleased to confirm that Singaporean Foreign Minister Dr. Vivian Balakrishnan will deliver a live keynote address at this event, so please join us for that. All these events are exclusive to our members, but there are some public programs that we run as well, so I would really encourage you to, of course, join as members, but if you can't, also follow us online, and we do quite a lot of programming for general public that's open to everyone. Again, thanks so much for joining, and a big thank you to our speakers and host, National Australia Bank. Thank you.